I think, one of the most pressing questions right now in the space, and I'd love to hear what you two think, is how does this backdrop of Fed stimulus, affect, I suppose, the near term, and then potentially we can move on to longer term implications for Bitcoin in particular, but I guess more generally the space. One of the big selling concepts behind crypto, and again, in particular, Bitcoin, has been its hard money, limited supply aspects. This would seem to potentially be an inflection point given the aggressiveness of Fed actions. What do you guys think, and how's that going to play out?
I'll try to start with that one. My view on crypto has, and particularly Bitcoin, has always been very, very constructive, and particularly because of this exact scenario that we're seeing, where we see central bank balance sheet expansion as far as the eye can see. And it's interesting. I was just looking at projections from 13 and 14 and 15 about what the Fed balance sheet was going to look like by 2020. And every one of them had a trillion, 1.2 trillion, and now we're looking at 10 trillion. And the problem with this strategy is that you can't get out of it. So we're looking at balance sheet expansion, which essentially is boosting the money supply of US dollars and sovereign currencies overall, as other central banks do it. So my view on Bitcoin has always been that this, because, as you say, of the stable money supply, but more importantly, Bitcoin has layered on top of it a robust financial ecosystem that you have a yield curve. You can trade derivatives. You can invest in equities. We call those ICOs. And unlike any of the other fixed supply assets, Bitcoin will, if you put your gold in your safe, you don't end up with more gold. But if you put your Bitcoin in your wallet, you do end up with more Bitcoin. So we see this as a real alternative. And as the industry continues to mature, we'll see volatility drop. And a lot of the reasons why, and the safety issues, as I'm sure Christine will talk about, go away. And I think we're going to have a situation where Bitcoin is an increasingly viable alternative to fiat. So I continue to be bullish. I think I'm about, as I like to say, about 70% likely to be wrong about my prediction, because there's so many things that can go wrong. But it's one of the rare opportunities where you have a 100x potential rather than a 1 or 2x potential in most investments right now.
Well, look, from our perspective, I can only speak about what we're seeing in the marketplace, but that digital gold narrative is really beginning to take hold across a very wide segment of institutional investors. So literally across the spectrum. So whether we're talking about RIAs that are serving high net worth individuals, or we're talking about pension funds that are looking for long duration appreciation, there's a significant uptick in terms of the narrative and the willingness to get involved. And I think the willingness to get involved also goes back to the fact that the ecosystem is beginning to get a little bit stronger. It's not the same. It's not the same experience that we have in other asset classes, but this is a very different. It's a different proposition.
A little bit of a follow-up along this line of digital gold and inflation and money supply for whoever wants to tackle it. How do you counterbalance in your mind yes, on the one hand, M2 is skyrocketing. On the other hand, velocity is plummeting, and many could make in my opinion, legitimate claim that this is a deflationary shock at its core, and that with unemployment at going towards 20% rather quickly, and who knows where it stops, that's unlikely to stop anytime soon. And at the same time, the past decade, when we all, myself included, I shouldn't speak for the two of you, but certainly I thought that the Fed's policies would be inflationary initially and were proven wrong subsequently. Why is this time different? And how do you balance those two thoughts of, on the one hand, yes, trillions, et cetera, but on the other hand, deflation, and central banks have failed to date to create it?
I think to answer that, you really have to make an accurate macro call on which direction we're headed in each sector. And I think the evidence suggests that that's a very, very difficult job. And so my view on this is that there are a lot of scenarios in which Bitcoin does not become the dominant force. But it's very, very important to have this as a potential that while it may be deflationary right now, if that happens, then you can be sure the Fed balance sheet is going to be 20 trillion and not 10 trillion. And eventually you start to see the water slosh back the other way. And you will start to see, I believe, eventually, as we have every other time in the history of civilization where fiat is available, the governments fall into the sin of printing too much of it. And for one reason or another, I agree. I was completely wrong about that in 2010 when I thought there was going to be inflation. But on the other hand, it got me very excited about Bitcoin, which has been good. So I think it's important for everyone to have this in a portfolio just in case this turns out to be right. And in a sense, a deflationary outcome for most investments that most of us have in our portfolios other than Bitcoin is not going to be so good either. So Bitcoin is potentially an inflation hedge, but you could also see it as a source of yield. If deflation is, if the real interest rate is -3%, and you can go to Celsius and get 4%, well, that starts to get pretty interesting.
Yeah, I agree. I think from our perspective, some of the themes that are emerging are that Bitcoin is also the first step in a broader exploration of lots of different digital assets. And quite honestly, it's also a play on the emerging technology as well. So you get the benefit of having this very interesting macro play, whether it's directionally correct or incorrect, and also an exploration into what this technology can potentially deliver, whether that is tokenized assets or whether that is digital sovereigns. So at the end of the day, you end up with a value proposition that's truly unique. And I think that is what's really resonating in the marketplace, irrespective of what your global view, your view of the money supply is.